So, hello, Patrick. Welcome to this first ever episode of Our Worldview in Gold. Here, we want to make it easier for people to get into the gold and silver investment game. And if we can answer any of the questions, help them understand a bit more about investing in gold and silver, we'll be happy to do that.
Fantastic, Jeff. Thanks for having me on.
So we want to start talking about the big story of the day, which is the Fed. Well, everyone knows they're going to cut rates, but by how much and whether markets have already priced that in. And judging by the silver prices, it's already down $1.50 from yesterday's highs. So how do you see that affecting asset markets?
Well, I mean, in this day and age, I'm always very cautious until something happens. It hasn't really happened, especially in America these days. So I'll wait for the actual announcement to occur by the Federal Reserve. But that being said, I mean, I think the noise around the rates and the political pressure exerted on the Federal Reserve has been quite tremendous over the past few months. So I believe that to a certain extent, this impending rate cut, which is very likely to occur, is to a large extent priced into the market already. I think we'd see a more violent reaction in the markets if there was not a rate cut. So I think the market is expecting a rate cut. I think you're seeing the precious metals in particular moving somewhat around that. In general, rate cuts are positive for precious metals. It's one of the major reasons why people stay in treasuries or stay invested in cash when they can generate income by having time deposits or holding US treasuries. And the less interest is being paid on such products, the less incentive is to stay in those products. And the more savvy money then flies into precious metals products. Now, the question, of course, is how far can precious metals prices appreciate? We've had pretty high appreciation year to date. If you look at an 18, 19-month track record from January 2024 to now, you're seeing an amazing appreciation across the board in precious metals. So the question really is how far can they fly? And I guess that's anybody's guess, but I think there's still some room for upward mobility in the gold price and also in the silver price. Um, Will it react instantly to the announcement? There might be some trading going on around the announcement, but I really don't think the prices are going to move majorly just post announcement. But I think over the next couple of weeks, especially as we come up to the end of September, month end, a lot of contracts are squared off, a lot of settlement dates are at the end of the quarter. I think more and more people will opt for physical delivery in their precious metals contracts, and I think the long-term perspective and short-term perspective for price increases and value appreciation for gold and silver is still quite positive.
Right. And I think the markets have priced in at least a 25 basis point rate cut, right? But I've read somewhere there are a few percent of traders that expect a 50 basis point rate cut. Do you see that happening?
Well, I think Powell's very cautious and he's been resisting cuts for a long time. So I personally I don't really see him going from no cuts at all to 50 basis points. I also don't think the American economy is in such bad shape that they need a 50 pips reduction in their interest rate. So I don't see it happening. What I do think is this will be the start of a process whereby you probably will end up with 75 or 100 basis point reduction in the interest rate over the next, I don't know, 12 to 18 months. But I'd be quite surprised if I saw a 50% drop in the interest rate today.
Well, unless he's doing to spite Donald Trump, you know.
Well, it could, you know. That being said, I think Powell is quite focused in what his mandates are,
Mm.
and as much as there is personal attack from the political sphere on the Fed and especially on Powell, I think he's professional enough to blend that out. And I think that's why he is where he is, and that's why, you know, I think he was put there in the first place. But you never know, you know. Sometimes people lose the run of themselves, or you know, you use an excuse to get one back on other people. So that can happen.
For this drop right now, do you think it's a good chance to start buying some silver?
Well, I mean, if you're in the physical game, and I always advocate precious metals investments to be in the physical form, I always say there's no right or wrong time to really get into the physical product, as you know, your time horizon for an investment in the physical product necessarily needs to be medium to long term. In the best case scenario, intergenerational, even, or transgenerational down the line to your children and grandchildren and so on and so forth. So, you know, if you're going into silver or gold because you have a positive long-term view of those products, it doesn't really matter whether gold is right now trading at 3,600 or 3,700, or silver is trading at 42 or at 39. Because, you know, in 20, 30, 40, 50, or 100 years, it will perform. It definitely will deliver the appreciation that it has traditionally done for millennia. But as I said, if you're in the market for the physical product, I always advise people, you know, buy over time. Don't put all your money straight away into the product, but, you know, in regular intervals, whatever, once a quarter or once a year or every month, depending on your budget, you know, you can buy that ounce coin or that 100 gram bar, or that 50 gram bar or whatnot, and just accumulate it over time and put it into safe and keep it for the rainy day that will come eventually.
That's true. But I also understand your point about because we on this channel we want people to buy the physical stuff, not paper, because we really believe in having the physical bullion in your possession and outside the system, or you know, for a rainy day, for whatever happens. And but when I started collecting a few years ago, so I would keep checking the prices all the time. This was just after COVID started, and I would say, okay, so silver's not moving. Oh, it's moving a few cents, and I would get upset if it falls a bit. But you know, after a while, you learn to cope with it and say, okay, this is for the long term. So that's what I tell my clients right now. So even yesterday, when I was telling a new client, okay, you're going to buy this kilo bar or this 10-ounce bar, be prepared. It could be, but they're coming in at the right time because prices are so volatile right now. I think this is a great time for them to transition from, say, more risky assets to gold and silver. And there's less of a drop in expectations because they're just as volatile as stocks right now.
Well, I agree. It's I mean, I guess it's human nature. Nobody wants to buy something at 100 and
And
then,
put it away
you know,
for
the next day you see the value's gone down to 96. It's, you know, you go to the supermarket and you buy I don't know, a nice bottle of wine, and then, you know, tomorrow you go and it's all of a sudden 50% off on offer. You're going to bite yourself, of course. So I guess to a certain extent it's human nature, but with precious metals in particular, and with investing in particular, or in general, you know, unless it is your job And unless you're looking at the markets day in, day out and educating yourself of what is going on, I think it's really more pot luck, whether you make money or not. So most investments really should be done with a medium to long term outlook, and really look at the basic fundamentals of an investment. So with an equity investment, you look at the company and make up your mind. Do you think that's a decent company that's well managed and has a competitive advantage over other companies in that sector? And what will that company look like in 20 years' time? And if you're positive on that as well, buy the shares. With gold, like I said, it has a track record of millennia. It goes back to the ancient Egyptians, and the track record is just there. Whether you can't argue with that. Whether you like it or you don't is a matter of personal preference. But the track record of capital preservation and acting as a store of wealth is simply there. It is international, and if you buy it today, if the price goes down in the next few months, don't worry too much about it. It will eventually come back. And I mean, look, I've been down 50% sometimes on my gold holdings. I mean, I've been buying gold for a long time now, and I acquired gold that was cost me 18, 1900, and then the gold price went back down to 1200. And that's the reality of it. Did I lose anything? No, because I didn't sell the bar. I still have it in my safe. So now I'm really up because it's at 36, 3700, but it could go back down to 25. It's there's that's just the flavor of the day. But you need to be able to stomach that. If you're not able to stomach that, then you might want to stay away from investing full stop, because then you can't buy stocks, then you can't buy bond funds, then you can't, even if you keep it in cash, you're losing money on a daily basis due to inflation.
Hmm.
So there's then you might as well just, I don't know, spend it on luxuries and buying handbags and going on vacation or something like that.
All boo-boos. That's the all the
Yes.
rage right now. No, but you're
Yes.
right. But let's hope what you said doesn't happen anytime soon.
No.
Those 50% drops. Touch wood.
No, 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 no,
Yeah.
no, no. I don't think there will be a 50% drop. I really think that adjusted for inflation, precious metals have basically caught up to where they ought to be, or at least in the range they ought to be. I mean, people tend to forget, I mean, people forget Lehman Brothers '08. I was a capital markets lawyer in '08. I went from 70-hour weeks to twiddling my thumbs, because that's what happened to the markets. They dried up. There was no business. And similarly, people have forgotten the amount of money that has been printed between 2012 and 2022. And it wasn't only the so-called global financial crisis and the euro crisis and all those sort of crises, and then COVID on top of it, and the helicopter money and the consumption vouchers and all that sort of stuff. That was money creation on an industrial scale. And that has led to all these alternative asset classes coming out of the woodwork, because you're creating this huge pool of cash. You're not paying anybody any interest, or actually negative interest, so you're charging them for the privilege of having a bank account. And then of course people start investing in labubus, or in rare wines that they don't really understand,
Oh, it's
or in art, and all those sort of illiquid investments. And they can work out,
hmm.
they can work out. The question always is, nobody knows which ones will work out. There's definitely no track records for these things. And then people get into things that, might regret over time. And I think, to invest in something that's time proven and has been around for a long time and is easy to understand.
Mhm.
There's no complicated mechanisms when it comes to physical precious metals products. There's no complicated regulations or anything like that. It's the original sort of investment and the original money. So it works. And if it ain't broken, don't fix it.
Like you said, well, gold and silver, they've been around literally forever, and they've always held their value. They'll outlast any currency, they'll outlast any government, they'll outlast you and I, outlast anyone watching this podcast right now. That's why it's the way to go. And
Yes.
right here, we do not encourage any speculation. Let's move on to our next topic, so the Chinese silver dragon by the People's Bank of China. And I believe that's the first time China has issued a mainstream 1 ounce coin, right?
I believe so. I think they're minting something like 2 million of them, which sounds like a lot, but
Mhm.
China is a big place.
Not to them. 2 million is not.
Yeah, exactly. It's a beautiful coin. Interestingly, it is exactly 1 ounce. So they because as you know in the gold sector their panda is 30 grams rather than 1 ounce. It's a beautifully designed coin. I think they launched it back in March, or they introduced it at least in March. And it's hit the markets here, and yeah, it's the ounce coin in gold and in silver is a nice investment size because uh, you don't have to mentally recalculate prices. It's very easy because gold and silver is quoted in ounces, so it's very easy to compare whether you're up or down, as is in our nature to do. And anything under an ounce really is not investment grade. It's more gift territory because the premiums that you pay
Premiums
are
are off
just
the
simply too
charts.
high that it makes sense. So the ounce is a really nice a nice size to start your investment in. It's especially in silver, it doesn't break the bank either, so you can dabble around a little bit. And with the People's Bank of China has good quality products, so there's absolutely no issue at all with acquiring it, and it's very, very beautifully designed.
Although I got to add, what you said about, people shouldn't buy anything less than 1 ounce if they want to invest, right? But in this day and age, when prices are this volatile, they can actually make up that premium they've paid.
Well, that is right. That is absolutely right. It is possible. And in silver, I mean, look, we've gone from 28 at the end of last year to now we're at, 41, 42. So the development has been quite extraordinarily well for silver and also in gold. So, and like again, like I said, you're not really buying today to sell tomorrow, or
Mhm.
you shouldn't at least when you're buying the physical product. You're buying today to, in the best case scenario, leave it for your children and hope that you never need it. And then your children may want to cash it out or may have to cash it out because of whatever, government collapses, financial system collapses, or
Student
or or
loans.
reserves you need, you want to invest in a house or something like that. But it'll definitely, again, medium long term, it'll perform.
So back to what you said about the Chinese mint having 30-gram coins, the panda coins, right? I was also under the impression they used to do they do tails? Tails?
Well, the tail is the old unit, of course, of the Chinese market, and confusingly, there's like an old tail and a new tail,
Mhm.
and the weight differences aren't massive. They're like the second digit behind the comma. So, and I believe Hong Kong and Taiwan have the old tail, and then mainland China has the new tail or something like that. To be honest, I have to check whether they made silver tails. I do not know that. Gold tails, I am pretty certain they did. And anyway, it would be the gold tail coin with the hole in the middle for gold. would definitely have been produced locally and in China by a whole variety of producers, and is still today produced from some of the companies we deal with. But again, the that's probably one of the things to look for when you are buying physical gold and silver products is who has produced it, just in terms of the quality. And People's Bank of China, you can rest assured the quality is guaranteed. It's a decent quality. Just make sure that you buy it from a reputable dealer, that you're buying the genuine product, not not any knockoffs.
Yeah, so it's great to see the People's Bank of China producing 1 ounce coins for the mainstream mass market. I think I've purchased 1 ounce coins from them before, but I think they're only for special occasions like the Asian Games. So it's good to see them try to appeal to the mass market and attract new international buyers.
Yeah, no, again, I agree. Of course, the People's Bank of China, it's such a large market, and historically, it's a very precious metals open market. The Chinese people have a lot of time for precious metals products. China and India traditionally are sort of the largest markets globally, and to see the People's Bank of China trying to establish what seems to be, one of the global 1 ounce silver coins is good to see. The development in the precious metals product space has been limited, to be honest. The large major, sorry, the last major development was in the 1970s when Rand Refinery launched a Krugerrand. And ever since then, there's not really been a whole lot of development. People have dabbled a little bit with QR codes, or with tracking codes, or with now what you see is the green gold, carbon neutral gold, and things like that. But in terms of an actual sort of product for the mass market, there's not really been a whole lot of development, and to see a major new player sort of come into the market, I think can only be good. Competition is good, and I'm sure they can give the Perth Mint and the Royal Canadian Mint a run for their money. So and it's also design wise, not everybody likes the Philharmonic coin. Not everybody likes the maple leaf, Somebody, it offers options for people that want something that has a different design. And it plays into the whole political development to internationalize the renminbi. I mean, it does come with a face value, so it is official tender. Now, of course, it's not going to move the needle in terms of internationalization of the renminbi. Don't get me wrong, but it's another little stepping stone, And they're selling it internationally, so it's. I think it's a net positive, and I'm happy to see them enter the market with this product, and I look forward to seeing the first one on my table.
Actually, they're being sold out at a lot of dealers.
Oh, I'm sure. I'm
And, and,
sure. I mean, like I said, 2 million sounds like a lot, but yeah, I mean, China is such a vast market. It's it'll be gobbled up in no time.
yeah. Well, and that's all the time we have for today. So thank you, Patrick, for your time.
Thank you, Jeff. Best of luck, and look forward to speaking again.
Yeah. Goodbye.
Take care. Bye bye.